The way you find it is you just look for that previous country candle before a move. I have found this to be the most accurate way. You are looking for the same exact thing on each and every time frame. So this M5 is exactly where we would be entering. Worst comes to worst, it doesn't reject off the M15. You have the H1 for it to possibly reverse off of, and you have the M5. What's up, everyone? Welcome back to another YouTube video. In this video, I'm going to be going over how you can find levels of supply and demand very easily. So I'm just going to go ahead, jump right into it. Let's get started. Now, the first thing you need to know is what is supply and demand, and I'm going to make this very easy for you guys. So supply is going to be an area where there's a lot of selling interest. So let's just go ahead, put this right here. Supply is going to equal selling interest. Now, demand is going to be an area where there's a lot of buying interest. So let's go ahead, put buying interest. Makes it easy enough. Supply, you're going to want to sell from. Demand, you're going to want to buy from. Okay, now how do we find levels of supply and demand? The way you find levels of supply and demand is you look for the previous contrary candle on that time frame. So let's go ahead and just put this for right now. Previous contrary candle. That is what you're going to be looking for. Now, you guys are going to be asking yourself, what is a previous contrary candle? I'm about to show you right here. And this is going to be our example of a level of demand. So check this candle out right here. Now, we are on the 1 hour time frame. I will go over time frames a little later, but check this out. This is the previous contrary candle, which would be our level of demand. We would be interested in buying from here because remember, we said demand is buying interest. So the way you find it is you just look for that previous contrary candle before a move. So see this black candle. This is the last black candle we had before these blue candles started forming and we got a good push. That's the easiest way I can explain and show you guys. So the way you are going to mark that out is you are going to go over to this and you are going to click horizontal ray. This is how I do it. Some people do it with the rectangles, but I have found this to be the most accurate way. So let's just go ahead and do it this way. You are going to go ahead, do that, click right up here, and notice on my templates I have all the time frames, plus I have session high, session low, take profit, all that. So I highly recommend, if you're going to do this, make sure you save it as a template and it will make it a lot easier. So we're going to go ahead and click H1 since we are on the H1 time frame. So this is our H1 demand, and you can see all we did was we had to look for a previous contrary candle, so a black candle before the blue push, and that was our level of demand. Now, if we wanted to go ahead and do this on a level of supply, it would be the same exact thing. So let's just go ahead, use this one as an example. Notice how we have this previous contrary candle, this last blue candle before we had these black candles going down. That is going to be our contrary candle. Now, keep in mind, we're still in the H1 time frame. So what do? We go over to horizontal ray. We mark the bottom of the candle and we go ahead and just tag that as H1. Now, before I go any further, when you are marking levels of supply and demand, what you are going to want to do is mark the very bottom of a level of supply. And for demand, you're going to want to mark the very top. So let's go ahead, go over to this demand real quick. So you're going to want to mark the highest point there is. So I marked the top of the wick. Now we can go back over to that level of supply. And you can see I marked the very bottom of that candle. Right where that little wick is, that's right where you're going to want to mark. If it's just a body on supply or demand, you're going to mark the top and bottom. It's always going to be for supply, the lowest part of that candle, no matter if it's body or wick. Same thing for demand, you're going to want to mark the top of the body or wick. It's going to make that a lot easier for you. I just made it very simple for you guys. You guys know what supply and demand is now. You know how to find it, and you know how to mark it. So let's just go ahead and do this on another time frame because I've had quite a few messages on Instagram and just in my group and stuff. They can find it on one time frame, let's say the M5, but they have a hard time finding it on other time frames. And guys, I can't stress this enough. You are looking for the same exact thing on each and every time frame. See how we were just on the H1? Let's go to the M5. And let's see, let's just go to that level of demand. Okay, so see how this candle right here, this is our previous contrary candle. Then we have that big push up. So we are going to go ahead, go back to horizontal ray, mark the very top of the candle. Notice how this is just a body. You're going to want to mark the very top. Go over here, see how these templates are coming in clutch, and you're going to want to put M5 because we're on the M5 time frame. Now you can go ahead and do this with a level of supply. Let's just go find a random one. Let's just do this one. Notice how we have a previous contrary candle right here, and then we had a big drop down. For there, mark the bottom of that wick, put M5, and there you go. So that is how you mark it on other time frames. We can even go ahead and do this on the daily if we wanted to. Let's just go ahead, find a level. So let's see, right here, we have a level of demand on the daily time frame. Notice how I'm just finding these really quickly. You're going to want to go here, click daily, and then boom, you have your daily marked out. Now notice this, notice how we tapped right into that daily, then got a really nice push up, super clean. And now look, if you wanted to find a supply on the daily, go here, put daily, and you're looking for the same thing, that previous contrary candle. Then we had a drop down. There is a daily supply. This would be our daily demand. Notice how I found it on the H1, the M5, and the daily super fast. Let's go to the M1 and do the same exact thing. A lot of people have a hard time with finding it on the different time frames, and notice how I'm just looking for the same exact thing on every time frame. Here's one right here. We have an M1 demand. We're going to go ahead, mark the top of the wick. We're marking the highest point, and we're looking for that previous contrary candle to the push up. It is right here, that previous contrary candle, then that push up. That is a level of demand. Now let's go find a level of supply, and you can mark this one right here. I'm going to mark the bottom of the body, M1. Notice how we came, pulled back into it, then had a little drop down. But look how easy we found that. You can literally just spot them everywhere. Just keep scrolling down. There's a demand right there. You can go ahead, see there's a supply right here, demand right there. Notice how you're always just looking for that previous contrary candle to a push, previous contrary candle to the drop, previous contrary candle to the push up. The next question, what makes a supply and demand level better than another? So we're going to go ahead and start off with this. Let's just go ahead and use this for an example, and we're going to go ahead and do a short as well, and I'm just going to go ahead and knock both of these examples out right here. So let's say you have a M5 right here, and let's say, actually we're going to just delete that and do it just like this. So say we have a M5 just like that. Let's say price is coming down. We're about to tap into this demand. We tap into it, get a little push, but now let's say the level did not get respected that well, so now we're going down. The trade's right here. Let's say we've looked at all our other time frames. That is the only level of demand right there. What's going to happen most likely? We broke past our level, so there's nothing stopping price. We're just going to go to stop loss, right? Now, let's imagine that we had that M5. Let's say we had a M1, and then just let's say we had a H4 right there. Let's say the same thing happens. We're coming down to price. We tap into the M5. We get a little bounce, but it does not respect that level. We have an M1, and then we have that H4. So the trade can always go to that M1, and we could see a bounce from that M1. Now let's say it doesn't respect that M1 either. We start heading down again. Now it has that H4 as a level to tap into before our stop loss would get hit. And then hopefully we would see the bounce from there and we can go to take profit. So what we call this is multiple time frames in confluence. And what multiple time frames in confluence is having multiple levels of supply and demand on different time frames really close together before your stop loss would get hit. All that's doing is giving a higher probability for the trade not to hit your stop loss. Because like we just mentioned, this has 3 levels that it could possibly reject and go back into profit. If we were to delete this M1 and H4, now you only have 1, And once we break past that, there's nothing stopping price. Now it's going to be the same exact thing for a level of supply. Let's just say we had a M1 right here, and price is heading up for that level of supply. Once we tap into that level of supply, we might get a little bounce, then it wants to break past it. Now there's nothing stopping price. Let's say on this example, let's say we had 4 time frames in Confluence, which we love those setups where we have 4 time frames in Confluence. And then let's just go ahead and put like an M5. Now this is giving us 4 opportunities for price to reverse and go back into profit before it would hit our stop loss. So you could see, let's say that M1 doesn't get the reaction we want, just pushes right past that M15. That H4 gives us a bounce, and then that M5 might be the best one there, and we might see the trend start going down even more. So in this setup right here, there's 4 chances, 4 levels for it to reverse and go back into profit. So remember, multiple time frames in Confluence is just levels of supply and demand close to each other before your stop loss would be hit. Multiple time frames in Confluence, levels of supply and demand close to each other before your stop loss would be hit. This would be 4 levels in Confluence with each other. This right here would be 3. This right here would be 2. And then obviously this one right here would be 1. Now the last and final thing, and you guys should have been able to tell by that example, but if not, I'm going to make it a lot more clear right here. So the way you're going to enter your trades using this strategy is you're going to enter off a level of supply or demand. So for an example, let's go back to the M5 real quick and notice how we have that M5 candle we were talking about earlier. We would go ahead and put a long here, just put our stop loss. So right here, this is what we'd be looking for. And I know I'm putting NQ on S&P. It's totally fine. It does not matter for this video, but notice right here, we have an H1 in Confluence. We have an M15. Now they're in Confluence because they're close by, and it is before our stop loss would be hit. So you are going to always want to enter on a level of supply or demand. So this M5 is exactly where we would be entering. You wouldn't want to enter up here. You wouldn't really want to enter here. To get a sniper entry, you're going to want to enter right on that level of supply or demand. So this M5 would be my entry. And if we go over and look at that other setup right here, this M5 would be my entry as well. Now we're going to go ahead and do this real quick. Let's just go ahead, put this. Let's go ahead, jump to the M15 because I want to show you guys this example. So we have an M15 right here. We have a, let's see, H1 right here. So check this out. If someone actually had a 20-point stop loss after we just marked out those other levels of supply, the way they would want to enter this setup is just like this. They would have their entry on this M15, and they would have the H1 and an M5 as a level of supply for backup. We would have 3 time frames in Confluence on this trade, right? Now, the reason you really don't want to enter off the H1 is because, yeah, we have a level right here, but you don't want to miss the trade, right? So this M15 is a very high probability, a very high chance for it to tap into that level and reject. Now, you might miss the trade if you have your limit on the H1. And the other thing about it is when you have your entry on the H1, you might take a little more drawdown if it goes up, but just like I said a second ago, you might get a sniper entry off this M15. That might be the time frame it rejects off of. Worst comes to worst, it doesn't reject off the M15. You have the H1 for it to possibly reverse off of, and you have that M5. You have 3 time frames for it to reverse. If you were to just enter off the H1 by itself, now you only have the H1 and you have the M5. You're only giving yourself 2 time frames for it to possibly reverse. So this setup would be better because you are possibly getting that sniper entry since that's the first level of supply right there. And you have the most levels of supply in Confluence with each other. So let's just go ahead and add it here. You are going to enter off a level of supply or demand. So just to do a quick little recap before we end the video, supply is selling interest. You're going to be selling from levels of supply. Demands, buying interest. You're going to be buying from levels of demand. Multiple time frames and confluence, that is levels of supply or demand close enough to each other before your stop loss would be hit. You are going to enter off a level of supply and demand. And to find supply and demand, you're looking for the previous contrary candle. So I'm going to go ahead and end the video there, guys. I try to make this as simple as I can. This is a very easy strategy to learn. This is a very rewarding strategy too. This is a strategy that has helped me tremendously in my trading journey, and I actually became profitable using this strategy. So if you guys have any questions, make sure you guys leave them in the comments below. If you guys want to join my group and watch me trade live, you can go ahead, click the link in the description, and I will see you guys in the next video. Peace out.